Hey everyone, it's Paul-Alexis, your Ottawa real estate buddy. And today we're diving into one of the most exciting moves you can make in your financial life, buying your first investment property. Whether you're dreaming about passive income, long-term wealth, or just want to make your money work harder than a 9 to 5, this video is your full step-by-step guide to getting started, right here in Ottawa. I'll cover everything, from how much money you actually need, to where to buy, to how to run the numbers, and what mistakes to avoid. So grab a coffee, hit that like button, and let's get right into it. Before you even look at a listing, you're going to ask yourself why you want to invest in real estate. Are you looking for cash flow, steady monthly income from rent, or are you going for appreciation, buying in a growing area and letting the property increase in value over time? Ottawa is great because you can find both. We have strong rental demand, stable job market, and historically consistent appreciation, especially in areas near Carleton, Ottawa, and the new LRT extension. Knowing your goals shape everything: your financing, location, property type, and even how you manage it. All right, let's talk about the money side, because that's where most people get stuck. For an investment property, most lenders in Canada require 20% down if it's not your primary residence. So if you're buying a $500,000 condo or a townhouse in Ottawa, that's $100,000 down, plus closing costs, which are usually around 1 to 2% for legal fees, inspection, and land transfer taxes. Speaking of land transfer tax, Ottawa investors only pay Ontario's tax, not Toronto's double rate. So you save there. Here's where it gets exciting. You can use a HELOC, home equity line of credit, on your existing home for the down payment. Or you can partner with another investor to share cost and ownership. And always get pre-approved before you start shopping. That tells you exactly what you can afford and helps you move fast when the right deal shows up. Now for the big question. Where in Ottawa should you buy your first investment property? Here are some areas to keep an eye on. Ottawa and Barrhaven. These are great for newer builds, families, and stable tenants. You'll get a newer home with fewer maintenance headaches. Vanier and Overbrook. These are up and coming, close to downtown, and seeing some redevelopment. You can still find decent prices and high rental demand. For Sandy Hill, Old Ottawa South, in Little Italy, these are perfect for students or young professionals, close to university and downtown jobs. Canada and Stittsville have strong tech sectors, low vacancy, and long-term tenants. South Keys in Riverside South, great growth potential near LRT expansions and new infrastructures. The key is balance. Good rent demand, reasonable prices, and future growth potential. And don't just chase cheap. Cheap areas often come with high tenant turnovers or lower rent quality. Focus on steady, sustainable cash flow. Here's where most beginners mess up. They buy based on emotions, not number. Let's break it down with a simple formula. Cash flow equals rent minus all expenses. Mortgage, taxes, insurance, maintenance, and utilities. You want a positive number, even if it's small. In Ottawa, a property breaking even with some appreciation upside can still be a strong play because of our market sustainability. A good rule of thumb: look for a rent that covers your expenses plus at least $100 to $200 a month positive. Expect 4 to 6% annual appreciation over the long term. Keep 5% of the rent aside for your maintenance and vacancy. And don't forget, Ottawa's rental demand means your vacancy risk is usually low if you price smart and screen tenants properly. You don't just have to do this alone, and you shouldn't. Successful investors build a small, reliable team. You'll need a realtor who understands investment properties, not just home buying. A mortgage broker who can get creative with financing options. A lawyer familiar with landlord-tenant laws, and a good contractor or handyman for quick, cost-efficient repairs. These people can save you thousands and a ton of stress. I see beginners make the same mistakes over and over. Underestimating repairs. They always get an inspection even if the place looks fine. Forgetting about property management. If you're busy, budget for it. A good manager can make your investment truly passive. Over leveraging. Don't stretch your budget so thin that one vacancy ruins your cash flow. And lastly, ignoring the tenant's laws. Ontario is strict. Know your rights and responsibilities before you list a unit. Buying your first investment property in Ottawa isn't about luck. It's about planning, numbers, and patience. The first deal might feel scary, but once you get through it, it opens the door to financial freedom, equity growth, and generational wealth. If you found this helpful, hit that like button, subscribe for more Ottawa real estate tips, and comment below. What part of the city were you thinking of investing? I'm Paul-Alexis, your Ottawa real estate buddy, and we'll see you in the next one.